After Friday's Fed surprise, Goldman Sachs just informed their customers of what's actually going to be happening between now and possible September rate cuts. The one thing to watch out for, I want to walk you through that, as well as 3 or 4 other data points that I think will make or break your week or even month, plus an actual opportunity that no one's looking at, and a warning why everybody's piling into the wrong stocks. Very simple. If you're going to get some value out of the following, then smash the you-know-what, and let's jump straight into it. I've got on the screen here the full unadulterated Goldman Sachs note. You can take a screenshot of that if you wish, but I'm going to walk you through it. I'm going to break it down for you so it becomes a little easier to comprehend. So the key thing is the Fed now has an actual window to cut rates. Why? It's the payroll revisions. So the Biden administration was, massaging the numbers to make them look good. Trump's actually now taking that playbook and doing it the other way around, making them look either realistic or bad, depending on how you look at that. That cat's a bit noisy, right? 1 second. And that is a good thing for certain sectors of the stock market. Not necessarily for everything, but for certain things. So what do we need to watch out for? This one thing. And you can look up this one thing. If you go into Trade Vision, at the top right here, we always have upcoming events, right? Watch out for those. Because before the next rate decision in September, we have some really key data coming out. 2 points of data. You might want to write this down. On the 5th of September, we get the unemployment rate and the non-farm payroll. So this is the key piece of data. And then on the 11th, we get inflation data. What we want to be seeing is pretty low non-farm payrolls. We're now expecting it to come in at just 50,000 new jobs created. That, in my world, would guarantee a rate cut. I think anything below 100K would actually guarantee a rate cut. No guarantees in life, obviously, but just my opinion. And then inflation rate, well, we just don't want it to shoot up. That's basically it, right? Keep it where it is and everyone's happy. So 5th and 11th, that's the key thing. Live news alerts are actually coming up as well for the Trade Vision app here. So if you haven't already subscribed to this, super, super cool to be getting the news, not just for the market, but also for all of your key stocks there. So there's a link down below here somewhere, felixprehn.org/Trade Vision, where you can get a free trial. You get the mobile app as part of that as well, and then the news alerts as they start rolling out shortly. So this is perhaps what you want to take a screenshot of or write down. A print in August of less than 100,000 new jobs created should give us a September cut. Why? Because there is huge uncertainty of how much more downwards revisions we're going to get in the jobs data. So jobs data has been cooked for, decades. Every president does it. Trump is now doing the thing that no president has ever done. He's going through the data, he's cleaning it up, and he wants to make there to be less jobs so that he gets his rate cuts, because he knows that's going to stimulate the economy. So it's a psychology game here, right? Now, here's the warning. Everyone is pouring into your NVIDIAs and so on. And if you look at the blue line on this chart here, that's basically the stock price of all the semiconductor stocks. And then in white, do we have a white pen? Sort of grayish. That is your earnings per share. So that's your profit for semiconductor stocks. And what do you notice? Well, if you zoom in a little bit on this, you will notice that there is a gap, a schism, or however you pronounce that. That gap here, mind the gap, as they say, is a bit of a warning that we might have overdone it. The last time we had that kind of a gap was sometime in 2024, and well, semiconductor stocks kind of corrected downwards pretty heavily. So we are front-running profits on semiconductors. So I think it's a little late into the semiconductor game right now. Maybe AMD is still a little bit of a better setup, perhaps, if they pull off what they're going to pull off. Intel now is a state-owned enterprise, which I don't particularly love. So not a term you usually see in the US, but yeah, the US is taking a stake in Intel, which is kind of worrying, if you ask me. But there is, if you have a little bit of a longer horizon, and this is a beautiful chart, even though it's slightly fuzzy. Sorry about that, I couldn't get it any higher res. This is the real opportunity. With every single innovation we have 5 phases. And the 5 phases are this. We have the initial innovation trigger. Everyone gets incredibly excited about it. Oh my God, it's going to change the way we live, right? And then we get overexcited and we get peak inflated expectations. Like the world's going to be run by robots by March. It's not going to happen. And then we realize the tech's cool, but it's going to take way longer and therefore it's boring, and then we come down. And we usually come down pretty hard on that disillusionment, and then we start to see a little later than we wanted to, this AI stuff, this robotic stuff, this autonomous stuff, this is freaking amazing. It's actually driving profits and just changing everything. And that's the point where actually a lot of the real money is made. So there are 2 phases really where you make the money. We've already done this phase, and in my humble opinion, we're near the top here, and we're going to get some disillusionment kicking in fairly soon. And then the beauty will be down here. That is going to be your real opportunity. That's where the big money is going to be made, and then riding that wave up next, right? So don't buy here. Don't buy there, don't buy there, don't buy there, don't buy there. Don't be that guy. Yeah? And you've done it before. I know you have. Most people have, right? So helpful? Put an H or something in the comments down below if that's helpful. This is what happens with every single innovation phase in the world. Now, one thing I'm doing is I'm looking beyond tech. I haven't bought a tech stock in a while. I'm buying stuff that's generally considered very, very boring. Healthcare is one of those that's popping up. Why? Because healthcare insiders, so the guys running those companies, they're actually buying stocks. They're buying more stocks than anybody's ever bought healthcare stocks before, because healthcare is boring. But that's pretty cool. And there's only one reason why CEOs buy their own stock, right? They think they're going to make more money. They sell it for many reasons: tax, mistresses, second yachts, fourth homes, third families, many reasons. Cocaine addictions, all that sort of stuff. But they only buy for one reason, because they think it's going to make them more money than buying anything else in the world, right? So when insiders buy, pay attention. And you can look at, again here in Trade Vision, open up XLV. That's the ETF that tracks the healthcare sector. And if you've been following me for a little while, you will understand that I look for this pattern, right? This sort of heartbeat pattern is what we look for. And we want to break out of these patterns. We want to take out all of these recent highs. And look what we've just done. We've just done it. We've just broken out. Now, it's still a little bit early because it's still below that purple line. What's the purple line? Anybody know? 1, 2, 3. It's the 150-day moving average line. You have to be quick around here. And when we break out above that, well, this actually becomes investable from my perspective. And we might therefore see a significant rally in healthcare stocks. So there's, of course, the ETF, there are individual stocks here, and then you zoom out a little bit and you're like, wow, since last September, healthcare is still down 13%, right? The rest of the market's gone up pretty nicely. So there is an opportunity in boring sectors like this. I think biotech is another one. I think it's XL, what's biotech? XLB? No? I can never remember these, by the way. Let's Google it. Biotech ETF. XBI, there we go. XBI. There are obviously others you can track, but this is just one easy way of looking at it. Look at that as well. That is also significantly down from November highs, still down something like 13%. And what has it just done? Well, it's formed a beautiful pattern, even more beautiful actually than the healthcare pattern. I'm starting to sound like your president, right? It's the most beautiful pattern in the world. You've got this sort of upwards channel here, and we're breaking out of that as a top as well. So that, again, looks very, very interesting to me. So we're looking for individual biotech nuggets. If you want to learn how these patterns work, and these patterns basically are what Wall Street looks for, right? So how do you want to learn that? There is a 15-minute lesson down below, felixprehn.org/get-free. There she is. And you can just learn this. It's free. It's 15 minutes of your life. If you haven't got 15 minutes to learn, well, you're still here 10 minutes into this video. You've got 15 minutes. It'll be way more informative than this particular video. And you'll actually learn what these patterns look like, how to find them, and how to also structure your risk management. So those are some of the sectors that I'm looking at right now. Insurance is another one. And there are obviously a couple of others, and I share this with my students every Sunday. We share sort of a list out there. But yeah, there are opportunities outside what everybody else is looking at. And so don't be that guy who's just got tunnel vision. It must be tech, it must be semiconductors, it must be AI stocks, because remember that chart? We're nearish a top of a valuation bubble there. I think we're going to see a pullback. It might not come right now, but I just think the risk reward in that sector is not that great. And we got to be very, very selective unless you want your portfolio to be very, very volatile. And I like consistency. Call me boring. I just like my money to work for me more consistently. So I move into whatever sector that Wall Street is moving their money into. I don't care what it is. It can be home builders. It can be biotech. It can be, I mean, literally the most boring thing in the world. Couldn't care less. I just watch where the money is flowing. And once you start to get that into your mindset, like it's not about the most shiny thing. It's about money. And the money is what makes the prices go up, the stock prices go up. So that's really all we do. That's what we follow. So go and learn that, felixprehn.org/get free, and then make sure you get yourself a Trade Vision trial there down below. There's the link again as well, because it's going to be the thing that'll inform you the best. I mean, literally the data we got in there, like nobody else has. And it's just a tremendous and an incredibly affordable tool. And we do it that way on purpose. So every single dollar you guys send us goes back into the development team to make it better and better and better. And we're launching some really cool stuff. Options are launching in the next couple of days on the mobile apps as well. So you'll be able to set up your options trades and check them out from there too. And a ton more stuff. News alerts is like the coolest thing in the world. I've been testing it for the last week. It's going to get launched soon. And I can just get the news for the stocks that I own and the stocks that I'm looking at. So cool. It's like the best filter in the world. Thanks for watching. If you got some value out of this, just share it with somebody. Seriously, that will be the best thing you could possibly do. Just spread more financial education. That's what it's all about. Winston says, well, Winston's buggered off, hasn't he? Yeah, he's gone off somewhere. So have a beautiful start to your week. Take care. Jerome Powell managed to flip the market into a massive bull run again with just one sentence. And if you're worried about or wondering which stocks you should be buying this coming week, then this is the video for you. I'm going to walk you through the top 15 or maybe top 13 tech stocks out there. I'll tell you in a second what they are. But first of all, here is the sentence that Hughes sniffed out in the Jerome Powell statement. And it is this: the baseline outlook and shifting balance of risks may warrant adjusting our policy stance.